Today is Thursday, May 2nd. We are now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 10:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. Crypto experts Kevin Merko and Jason Fernandes are with us to discuss issues that are trending in the crypto space. But first, let's take a quick look at how the markets has performed over the past 24 hours. The cryptocurrency index, CCI 30, stands close to the 2,900 point level. It is virtually unchanged so far in May. The top 30 crypto index has gained 34% year to date. The 30-day Bitcoin volatility index has shown no significant moves over the past month after jumping by approximately 2% in early April. Trading activity has slowed down. The CoinMarketCap's website's 24-hour trading volume indicator has declined towards the $40 billion mark. The so-called real-time volume, which is aggregated by the Messari website, has declined as well to stand at less than $1 billion. The Bitcoin dominance indicator has had no significant change over the past 24 hours. The crypto king holds just over 54% of the total market share. The top 5 digital assets are mostly trading sideways. Bitcoin posts a 1% increase to rise above the $5,400 level. Ether has established support at the $160 range. XRP has slipped, but the 30-cent support level holds for now. Bitcoin Cash has moved north towards the $280 mark. Litecoin has gained almost 1% to trade close to the $74 price range. The Coin 360 heat map shows the major assets are in the green, but we can see some red on the charts as well. According to the Token Spread website, Bitcoin continues trading at a 6% premium on the Bitfinex exchange. The XMO exchange shows the biggest single market spread of 0.15%. Let's take a quick look at some of the characteristics of Nexo. The project claims to be the world's first instant crypto-backed loan service. By opening an account and depositing your digital assets in Nexo Wallet, you gain access to a credit line with a limit that is based on the market value of your cryptocurrencies. This way, users can obtain cash without selling their digital assets. The company provides dividend payouts and lower interest rates to the Nexo token holders. The asset hit its all-time high of nearly 54 cents in May of last year. Currently, it trades at just slightly more than 8 cents. We will now review the performance of various cryptocurrency asset classes as categorized by the Messari website. The infrastructure group is the most bearish asset, with a daily decline of 1.6%. Ontology and Neo are providing some support for this sector. The media and entertainment category is down by nearly 1%. This is despite all of the top assets trading in the green. The financial sector posts a decline of close to 1% as well. The digital asset in this group are trading lower across the table. The currency category is the top performer with a decline of just 0.27%. Bitcoin is providing support as it trades in the green. And lastly, the services section is down by just 0.44%, even though most of the assets are on a move south. This is where the 5 major cryptocurrency categories stand so far this Thursday. We will now focus on the most significant moves among the top 100 cryptocurrencies to identify the top gainers and the biggest decliners. We'll start with the gainers. Most of the assets are trading sideways and there are no double-digit surges. The Cosmos Atom token posts a daily increase of 7%. It trades at $4.55, which means it is up by nearly 40% over the past 7 days. The BitTorrent token has continued trending up from Tuesday's low. The asset shows a 24-hour increase of 4%. The Dash coin is up by 4% after facing resistance near the $120 mark. The privacy-orientated Monero coin trades at $65 on a daily gain of close to 4%. Another privacy coin, Zen, wraps up this list with an increase of 3.6%. The most recent gain puts the price above the $8 level. Let's move on to the decliners, where we do not have any double-digit moves. Ravencoin leads the table with a decline of 6%. The altcoin has stabilized above the 5-cent support line. The Project Pi coin follows with a 24-hour contraction of 5%. The Digix DAO token has returned back above the $28 price level, but it remains 3% in the red. The Maker token plummeted yesterday, but some of the loss has been recovered. The asset trades less than 3% in the red. The Populous token has found support at the $1.10 mark following a daily decline of 2.5%. These were the top 24-hour moves during the European morning trading session this Thursday. Now, don't go anywhere, as we will be back after this short break to speak to our crypto experts.
180 different countries all around the world, which makes us grow in like a sphere.
We are stronger than ever.
Have these questions answered without disclosing anything.
AI field is mostly controlled by a few large corporations.
Much busier, bigger than ever.
In the mid-2020s. I do think that will come.
We should kind of keep in mind that we want the world to be a better place.
$15 billion a day. This is incredible.
People find a way to create infrastructure.
I think knowledge is one of the most important things in the world.
We laid the foundation for the distributed trust model that Satoshi builds on.
It does come with some risks, but at the same time, I think it's an opportunity for countries.
Individuals miss the boat on a market, they miss the boat. When the institutions miss the boat, they bring the boat back.
This is BloxLive TV.
Welcome back to BloxLive TV's Crypto Now program. We will now join our crypto analyst Kevin Mirko, CEO of the Coin Metro Exchange, and Jason Fernandes, COO and co-founder of AE Token. Hi guys, great to have you as always. How are you doing today?
Excellently. How are you?
I'm great, thank you. Now, Bitcoin shows a slight increase, but the overall markets have been mostly moving sideways since Wednesday. So is there anything you would like to highlight on the markets, or do traders remain in the wait-and-see stance? So, Jason, we'll go straight to you. Your thoughts for us, please.
Yeah, so I think we're on the march to 5,500 and beyond. I think Bitcoin was already inching upwards, but the Bitfinex incident sort of cut its momentum. I said the other day that I thought in the long run the Bitfinex incident would actually work out in its favor, in Bitcoin's favor, because a lot of funds are moving from Tether to Bitcoin. And today it's in the high 5,300s, so it's been slowly inching up. And I think I'm overall positive that we'll get to 5,500 and we'll get back some of the gains we lost.
Jason, thank you for your thoughts there. And Kevin, please.
Yeah, we've been talking about this ever since Bitcoin broke 5,000 USD, and the fact that it's kind of creating higher highs and lower lows. So it's turning old resistance into support. So we saw that happen around the 5,000 level. We're seeing that now happen around this $5,300, $5,400 level. 55 obviously is more psychological barrier because it's just a round number. So breaking through that would lead us up towards 6,000, which would be the next psychological barrier that needs to be broken. Not to mention that 5,600 actually, or closer to 6,000, sorry, as we get through 5,600 towards 6,000, we're going to be breaking through another large psychological barrier, which is 5,000 euro. The euro market on Bitcoin is obviously smaller than the USD market, but overall, it's still quite a big market. And as Jason mentioned, you have this kind of tether phenomenon, right? So Bitcoin there's always an ebb and flow in Bitcoin because that's where liquidity sits. Right now, we're seeing a flow back into Bitcoin basically because people are trying to get out of tether. And so they're going back into the more liquid asset in crypto, which is Bitcoin. So just like we saw the altcoin market, which was kind of a flow away from Bitcoin, away from the liquidity into these micro caps. Now with this tether news, we're seeing a bit of ebb back into Bitcoin coming out of Tether.
Excellent. Thank you for your insight. Now, a survey online by the Harris Poll on behalf of Blockchain Capital was conducted last month. A similar survey was actually previously conducted in October of 2017 during the bull run. So all of the metrics have since improved positively. Are these results surprising, considering that the general interest is a lot lower during the bear markets? Jason?
So I don't think this is surprising. The poll says something like 48% of adults are familiar with crypto in the U.S. And basically the poll covers the public perception of Bitcoin. But really the reason that has improved to such a great extent is because the fundamentals have also improved. So I said recently that Bitcoin has seen the highest network activity since Bitcoin was at 10,000. Meanwhile, transaction fees are 5 times lower. So that indicates the scaling is not quite an issue. The total number of transactions are up, but more importantly, the total number of outputs are also massive up. So we're averaging something like 1,067,000 outputs, and outputs are important. That's per day, and important because a lot of cryptocurrency exchanges are using batch processing to essentially group a number of transactions together to essentially save on transaction fees. So sometimes, even though the transaction numbers are high, that doesn't tell the whole story. And if you look at the outputs, those are also massively increasing. And if you look at pretty much every other key indicator, hash rates, another key indicator, it's up 5x. Pretty much all the metrics have improved. So this poll is just a reflection of the actual fundamentals of Bitcoin improving.
Okay, and Kevin, do you tend to have a similar stance to Jason here?
Yeah, I agree with the points raised by Jason. I think that, we've talked many times about this as a hype-based market. And when we had the bull run in 2017, obviously the news cycle, even on major news networks like CNN and BBC and MSNBC, there was a lot of talk about crypto and Bitcoin and crypto and the underlying market and 1,000% gains and things like this. But and that obviously brought a lot of eyes to the market and brought a lot of recognition to the market, which obviously increased the amount of people, the adoption rate, et cetera. But the same thing happens during, let's say, this crypto winter we experienced, because Bitcoin and crypto in general started to get a lot of news coverage again towards the bottom, because it was negative news coverage, but it's still news coverage. So even though it might not be quote unquote hype, there's still a bit of a hype cycle created around that crypto winter. Not only that, but the amount of infrastructure development that has been going on the blockchain has expanded, immensely since 2017 into 2018, now into 2019. So there's definitely more and more institutions that are building on the back of blockchain, not only Bitcoin's blockchain, but many other blockchains, Hyperledger, et cetera, that are basically being used by all these different industries to build out their own product base. So it comes to, as Jason mentioned, it's really no surprise that metrics and price have no correlation, right? So, and I think a lot of participants outside the market believe that if price is lower, somehow all metrics will be lower. But price and the amount of transactions and the amount of money moving through the market, there is absolutely no correlation.
Okay, thank you. Now, the US Federal Reserve actually left interest rates unchanged yesterday. This is despite Trump tweeting on Tuesday that the rates should be slashed by 1% to help US economy, quote, go up like a rocket. There has been no significant immediate impact on the price of Bitcoin just yet. So now experts have said on the show that this quantitative easing experiment is bullish for Bitcoin. So do you agree with this view? And are we likely to actually see longer period of loose monetary policy since inflation is not actually a concern yet? Jason?
So yeah, I think lower interest rates are generally great because that frees up more capital for Bitcoin and crypto. The Federal Reserve usually lowers interest rates to kickstart the economy when that's necessary, because people tend to spend more because obviously they don't have to pay very much for the money when they borrow it. The market hasn't shown an immediate impact because Trump's suggestion was basically snubbed, and the Fed basically kept the interest rate as is. On the other hand, high interest rates could positively impact Bitcoin because that would raise the price on regular borrowing, such as home mortgages and credit cards. And some cautious investors might see that as a sign of trouble in the economy and then start hedging by buying Bitcoin and cryptocurrencies. So it's sort of how that will work out, it's yet to be determined. The thing that complicates matters even further is that a lot of crypto now gives interest. So there are a lot of services out there which will actually pay you interest on your crypto. So I mean, it's just incredibly complex how this is going to work out.
Okay, and Kevin, your thoughts, please.
Yeah, I don't think the Bitcoin market in general, the crypto market in general, has matured enough to where we can actually classify any of these assets as, let's say, safe havens. I know there's a lot of talk about, Bitcoin being or Bitcoin and gold being somehow in some type of race to see who wins. I don't know, some type of battle. I'm not even sure what the real prize is at the end of that rainbow, to be honest. But I don't think that the market has matured to that point. To be honest, there's not enough liquidity. There isn't yet enough infrastructure for that to even be, let's say, something in contention. So when it comes to that, these type of things, quantitative easing and such, obviously have impacts on safe haven especially commodities, gold, for example, because as Jason mentioned, when money is cheap, people usually borrow more money. They borrow more money to invest. They borrow more money to invest, whether it's in real estate or actually just make speculative investments as well. When money costs more, when money has a higher cost, they obviously invest less. They're borrowing less. So those things do impact the entire economy. So they would have a slight effect on anything, to be honest. You could probably have some correlation between quantitative easing and the amount of money that your kids spend on video games, to be quite honest, if you really dug deep enough, and you could probably link those dots somehow. So there definitely is some type of correlation, but I honestly don't think it's that high of a correlation yet, mainly because you can't, in my mind, you can't yet really conceive any asset in crypto as being a true safe haven where it would really be affected by the quantitative easing.
Okay, now, Kevin, we'll stick with you for the minute. The state of Washington recently passed the bill recognizing the validity of distributed ledger technology. What are the main benefits of this bill, please?
Sure. So the real main benefit is that what they're saying is that an electronic record, meaning a record on some type of DLT technology, for example, or a blockchain, has the same legal effect and validity and validity as any other type of record, whether that be a paper record or any other type of stored record. So they're basically just giving credence to the fact that records stored on the blockchain should be treated the same way legally as records stored in any other approved manner. It's just giving validity to the actual underlying technology. So it's kind of step one in making sure that if for example there's any type of records, let's say bank records stored on a blockchain, and there's maybe there's an error or somebody catches something they assume to be an error and there's a lawsuit, that record that's been stored on a blockchain would have the same would be as valid as any other type of record stored by that bank or that financial institution, for example.
Okay, thank you for your thoughts. Now, Jason, what would you like to add? What are the main benefits of this bill?
So I don't think anybody in this industry has ever questioned the validity of distributed ledger. So it's really good that government is finally catching on. Essentially, what this says, as Kevin pointed out, is it means that data is not discriminated against if it just so happens to have been stored on a blockchain. And actually, that's useful for a lot of companies over there, because companies working with blockchain and distributed ledger technologies have thus far had to spend exorbitant legal fees due to essentially lack of familiarity with the issues surrounding, development of these technologies in the legal system. And essentially, this represents a minor step in the right direction. I think we can hope for a lot better and more involvement of government, positive involvement. But this is a great step a good step in the right direction.
Excellent, thank you. Now, the Eris exchange, the Eris X exchange has launched their cryptocurrency spot market. So, could you please explain what this means and what influence this could have on the assets that are listed on the platform, Kevin?
Sure. So the only difference between a spot and a future market is that a spot market, anything you buy on a spot market, is immediately deliverable. So essentially, this entire market, really the way it operates with exchanges, whether you're trading on something like Binance or something like CoinMetro, or you're trading on any other, let's say, exchange in the crypto market, is a spot market by definition. So these guys just happen to be using what would be an industry-specific definition, which anybody in the industry recognizes. But I think outside the industry, it just sounds more glamorous. But the entire deliverable markets, or the entire exchange market in crypto, is spot. If you're trading on a futures market, that just means that you're not getting immediate deliverability. So when you buy a Bitcoin, you don't actually get that Bitcoin immediately, because you're actually betting on a future price of that asset. So you may, depending on what type of future you're trading, gain access to the deliverable form of that product at some point in the future. So what effect does it have? Well, it doesn't necessarily have that big of an effect. They're just another player in an already very segmented market. Obviously, these guys may have a little more reach or a little more access to, let's say, liquidity or et cetera than other players in the market. But outside of that, not much of an effect, to be honest.
And Jason, do you tend to take a similar view to Kevin there?
Yeah, mostly. I mean, this is a really crowded market. Increased liquidity is always good. Their platform will include both its exchange and its clearinghouse, so that allows them to take custody of both cash and cryptocurrencies. But the OTC market has been going on for a while. There's several cryptocurrency exchanges, but I guess the more liquidity, the better, right? So I think, and these guys have been pretty good. They recently were able to raise $20 million. So they apparently know what they're doing. So hopefully they'll bring more people to the market.
And the exchange also maintains its plans to launch physically settled futures. However, just like BACT, they still need a green light from the CFTC. How are these different from the product that has already been launched? And could the potential impact on the assets be different? Jason?
So OTC trades do not need a green light from the CFTC, but when you start talking about futures and stuff like that, those obviously need a green light. As opposed to BACT, IrisX is essentially a pure market infrastructure play. Whereas BACT sort of believes in both being a clearinghouse as well as a payment processor. So they're competing with Visa and MasterCard. And I guess that's the way they feel that they need to go. But sort of that's not the area that IrisX is currently attacking.
Kevin, as usual, your thoughts for us, please.
Sure. So yeah, the CFTC, obviously, there's many things compiled into, for instance, a license with the CFTC. If I'm not mistaken, the minimum capital requirement is 25 million plus liabilities. And that process to acquire a futures license from the CFTC can take anywhere, usually from 12 to 24 months. And that's when you're dealing in, let's say, traditional futures. The fact that they're dealing in something that's new to the CFTC, the fact that, like this precedent we just had in Wyoming about data on a distributed ledger, that's Wyoming, though. That's one state. There's been no federal precedent set yet in the United States, which means that the CFTC has to dig into the technology, understand the fact that it's trustless, understand the fact that no one can tamper with it, et cetera. That's why the BACT licensing has taken so long. And if anybody's, biting their nails waiting for BACT to get that license, they better stop biting because they won't have any nails left. This process will take a long time. It's already been about 6 or 7 months. If this was a traditional market, it would take another year. So I wouldn't expect it to happen anytime soon. So the main difference, obviously, between what they're doing now, which is spot and futures, is that futures, one being a regulated market under the CFTC, but it's also just a different delivery mechanism. So instead of getting immediate delivery, so you buy a Bitcoin, you get your Bitcoin, you're basically betting on a future value of the asset. So you're betting maybe what Bitcoin will be worth in 30 days, 60 days, 90 days, and you don't actually take delivery until the future expires. That actual product expires. On that expiry date, you can choose to take delivery or not. That's the main difference.
Okay, thank you for clarifying that. Now, an interesting one we have. So Grayscale launched an ad campaign, Drop Gold. Now, let's take a quick look at it now.
Why did you invest in gold? Are you living in the past? In a digital world, gold shouldn't weigh down your portfolio. You see where things are going. Digital currencies like Bitcoin are the future. They're secure, borderless, and unlike gold, they actually have utility. Leave the pack behind. It's time to drop gold. Go digital. Go Grayscale.
Now, of course, it is an ad that has been trending in the crypto space, but is Bitcoin really a good replacement for gold in a portfolio? Jason?
So I think the whole question is whether Bitcoin is really at the level market is mature enough to be at the level where it's a safe haven asset, and it's certainly not the case. But it will only get to that point if it gets adopted more, if more people come into the market. So it's sort of a chicken and the egg type thing if you talk about that. I mean, the more people that come in, the more the market matures, and over time, the more the market matures. So I mean, there are obviously some very definite benefits that Bitcoin Bitcoin provides over gold. It's a superior store of a store of value because it's lighter, it's more practical to hold as a long-term investment. And people that have actually grown up with the internet and are sort of 21st century kids are not as enamored by precious metals or things like gold and silver. Another thing that you have to think about is that the value of crypto, the value of, let's say, Bitcoin or any crypto, is determined by the value that it can cannibalize from other assets. So if gold is a $7 trillion market, and if, let's say, 10% of people move move their holdings that are currently in gold into Bitcoin, that would massively increase the valuation of Bitcoin, even 5% were to do that. So I think it's a great idea. I think it would be the more people that move from gold to Bitcoin, at least for the cryptocurrency market, that's a good thing.
Very, very interesting. And Kevin, do you also think that replacing it is a good thing? What are your thoughts?
Well, the ad is kind of funny, to be quite honest. But I think any portfolio, gold and Bitcoin right now, I think, is a really stupid comparison. It's not even apples and oranges. It's like apples and skyscrapers. I mean, it doesn't make any sense to me whatsoever. But inside of a portfolio, you should always have some high risk assets, always, because it helps balance out the return of the portfolio. So having Bitcoin in a portfolio is not a bad idea. Trying to compare it to gold, I think, is quite laughable. And in the last statement they made that there's no utility for gold I don't even know if that's funny or just sad that was in there, because obviously gold has a ton of utility. It's used in I don't know how many different industries, including the medical industry, including in tech. Gold has a lot of utility behind it, proven utility, right? So I think that the ad's a bit laughable. Obviously, it's getting some views, which is great. It'll bring people in. I think to be honest, from a market standpoint, anybody that has any market experience, I don't think would be comparing crypto to gold. However, they would probably tell you that it's good to have some type of high-risk asset in your portfolio. And Bitcoin is now this new asset, kind of new type of asset delivery vehicle that's high risk. And it makes sense to have in every portfolio for sure, but not because it's anywhere comparable to gold. It's really two completely different reasons to have both of those, let's say, assets in your portfolio.
And Kevin, although you're not overly impressed by this advert, are viral ads like this one a good tool for mass adoption? If you could be quite brief with your answer, we'll push for time, please.
Sure. Yes. Short. Yes. Like we've said a million times, it's a hype-based market. The more people we get to see these type of ads, the more people that get interested, the more people that kind of are there leaning on the fence, jump into the market, and that's going to be good for adoption, good for the market, good for liquidity. So yes, these type of ads are a good thing, regardless if you generally agree or disagree with.
Excellent. And Jason, your thoughts for us, please, finally.
Yes, this is a massive campaign, and it'll probably go everywhere. I think it's interesting to see Kevin's view of gold, because the ornamental use case of gold didn't even come up when he was listing out the use cases, which is kind of funny.
Sure. Kevin, Jason, as always, thank you so much. It's been a pleasure having you on the line with us. Now, before we sign off, I have a last-minute update from our editorial staff regarding the crypto market. The digital assets have edged slightly up. The total market capitalization has increased above the $175 billion mark. Trading activity is virtually unchanged, and the CoinMarketCap website's traded volume measures close to the $42 billion level. If the rise continues, Bitcoin could soon test the 5,500 resistance line. 5,500 resistance line. Well, that is all for this Thursday's Crypto Now Live show. We thank Kevin Merko and Jason Fernandes for the expert analysis. We thank the audience for joining us and invite you all to accompany us every weekday at the same time.